Good morning to you. Happy Monday. I'll tell you what, better Monday than what it was last Monday, because last week you might remember, of course, the markets were melting down at that time. But you might now be thinking, what was all the fuss about? It, of course, had a massive fall, prompted by fears that China's slowing economy will have a knock-on effect around the world. And then the US followed suit, almost like the horses were spooked. Well, as I said last week, Australian investors were among the first to have confidence that China's stock market fall is about its local issues, like too much borrowed money in shares, and not really about those big global issues. But there's still no doubt that the horses did bolt, and this is why the so-called VIX index of US shares, it plots volatility in the market. You can see it here. Give or take over the past 3 years, it's averaged about sort of 15. But last week, that measure of volatility jumped to its highest point since the global financial crisis, almost 3 times the normal volatility. Now, my tip for you is, despite the apparent calm in the markets as we start this week, this volatility has not gone away. There are going to be rocky times ahead, because my suspicion is there's something much deeper behind the stock market reaction last week, and bond markets as well, that has absolutely nothing to do with China and everything to do with the US. The United States right now is in unknown territory. It has national debt, government debt that is, of $18.3 trillion, and a budget deficit that means that the debt is still rising, even though the money printing exercise called quantitative easing has stopped. Well, right now the US Federal Reserve is poised to raise its short-term interest rates for the first time since June 2006, so more than 9 years ago. We should hear more about that later this week. But the fears in the market are, what happens next? When a nation has so much debt and you start increasing interest rates, does the economy keep on going as it has, or does a rate rise kill it stone dead? And until there's a definitive answer to this question, the market volatility will remain. It also bears remembering that our high-flying Kiwi cousins across the ditch raised their interest rates last year to cool their economy, only to have to cut rates this year as its economic growth rate dragged on. In other words, the last of these crazy days are certainly not behind us, not by a long shot. Let's go to the markets as we start our Monday morning, and we can see that the US dollar, the Aussie dollar rather, sitting at 71.5 US cents and just above 64 euro cents, $1.10 against the Kiwi dollar as well. The gold price, $1,133.96 US an ounce, and oil prices $45. The Dow Jones on Friday down by 11 points. As I say, a bit of market calm sort of ended the week last week, and if we move further forward, we can see that the Asian markets, well, they were heading in opposite directions, Japan and also the Hang Seng in Hong Kong. In London, the FTSE 100 was up by 55 points. On Friday here, our stock market was up by 32 points, notwithstanding what was, you can only call it a Barry Crocker of a result by our biggest retailer, Woolworths. There's no doubt about that.
Barry Crocker.
That was a huge bad result for
it's amazing, isn't it? They've lost their chief executive, the head of supermarkets at the start of the year. A week ago it was the head of Big W, and now the chairman.
How much of that do you think is all of these new players, or how much of it was them just getting it wrong?
About 95%. It's all about the new players.
Really?
And then the other part of it is their strategy of masters and all that sort of stuff, the amount of money that they'd actually poured into that. And the truth is, my understanding of it is that the other supermarket chain, Lidl, that keeps on denying that they're... I understand they are absolutely cherry ripe to arrive in the Australian market.
Definitely coming, and they're along the lines of Aldi.
Very much so.
But even cheaper?
Well, that's right. Well, they're of a similar style. They have more branded products in store, apparently, but they are very close to pushing the button, I understand.
Crowded market.
Will be.
Good on you, mate. Thank you.
Thanks.